Ford CEO Jim Farley spoke at the company's capital market events this week and with Tesla CEO Elon Musk today on Twitter Spaces. Jim Farley has argued that Ford has been confined to a valuation box, grappling with capital constraints, narrow profit margins, and cutthroat battles for market share. However, he aims to change the narrative with what he calls Ford's unique strategy in the electric vehicle market. Meanwhile, Tesla's Model Y, which goes head-to-head with Ford's Mustang Mach-E, is breaking records worldwide. Already in the first quarter of the year, Model Y was the #1 selling car of any kind in Europe, the best-selling non-pickup truck vehicle in the US, and China's best-selling SUV. It's on track to become the best-selling vehicle in the world this year, as Elon Musk predicted, and the Model Y is already in third place globally. Certainly a force to be reckoned with, even though Jim Farley believes he's entering markets with less competition. But Ford is investing heavily in order to battle the waves and to hit an astounding 2 million electric vehicle sales in 2026, although despite their efforts, they may not be prepared for what's coming. And before we continue, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and a brand new set of quarterly financial data going back up to 15 years on over 9,000 stocks, and it's all freely available. Right off the bat, in an interview with CNBC, Jim Farley is asked about hitting 10% EBIT margins across the company in 2026, which he believes is sustainable. By definition, this would be earnings before interest and tax, demonstrating how low auto margins are given this ambitious target. Today, EBIT at Ford is closer to 3%, but this includes all three segments of Ford's business: gas cars at Ford Blue, electric vehicles at Ford Model E, and Ford Pro. Jim Farley is counting on Ford Pro, which is the company's commercial side of the business focused on software, services, and fleet management, to prop up these earnings, with expected EBIT margins planned to be around the mid-teens. Now, this is a great high-margin business for Ford, providing data, telematics, and services that span across both gas and electric commercial operations. Now, Ford is already a leader in this space, expecting to make $6 billion in earnings before interest and tax this year just from Ford Pro alone, $1 billion shy of their entire gas car business. While the company believes that this is a unique proposition for commercial customers, Tesla actually appears to be coming after this business. We're already seeing Tesla enter the commercial trucking space with the Tesla Semi. While it's something that Ford doesn't offer, and it's still in its infancy, Tesla is learning quickly about commercial applications of its vehicles combined with its own telematics. The infrastructure that the company has laid out, including its massive supercharger network, is far superior than anything Ford has to offer on this front. Now, Ford prides itself on electric trucks, the F-150 Lightning, and commercial electric vans with the E-Transit, both of these offerings aimed at replacing existing ICE counterparts. Now, while Elon Musk has hinted about a future electric van, the release of the Cybertruck could actually surprise on the commercial side for Tesla. Few are really looking at Cybertruck for commercial purposes in terms of software and services, the same way that Ford Pro is structured. But Tesla's foray into the semi-truck market could give them an edge for applying new similar software to commercial Cybertruck applications, eating into Ford's lucrative business. At Tesla's recent lithium refinery groundbreaking, the Cybertruck was equipped with a custom tool bed, demonstrating its versatility for commerce and for small businesses. Tesla's software integration capabilities have proven to be world-class, and the work they're doing for managing future fleets of Tesla robotaxis could translate well into this adjacent commercial fleet management space. Now, Ford's 2026 targets include Ford Model E, which is their electric division aiming to have 8% margins by this time and a staggering 2 million unit sales. To put this into perspective, there's a chance Tesla may hit 2 million vehicles this year, and so Ford's elaborate plan to achieve this would still occur about 3 years after Tesla if both companies are successful at meeting their goals. But this will actually be an insane endeavor for Ford, given that the company loses roughly $60,000 per electric vehicle that they currently sell. Now, there's a joke in the auto industry that they'll make it up on the volume, which is meant to point out that the more cars they make, the more money they will lose. But actually, this $60,000 loss per vehicle includes all of the fixed costs and expenses, amounting to a $3 billion loss this year at Ford Model E. So increasing volume is actually critical for the company to divide those fixed costs across more vehicles, while at the same time Ford, of course, still needs to pull costs out of their cars. Jim Farley, however, even highlights that Tesla's price cuts have indeed been impacting the company. He's baking into his forecast massive pricing pressure on the Ford Blue ICE vehicle business, but not because of EVs, he says, but because they're at a record high pricing range currently, so the prices have to come down 5 to 10%. That said, he should be more worried about EVs since the prices of Teslas are now on par with top-selling gas cars. On the electric side, the Ford Mustang Mach-E faces off with the Model Y. As Jim Farley fully admits, they've had no choice but to reduce the bill of materials by $5,000. Normally, they look for hundreds of dollars to save, but Jim Farley says, "That was so painful for us." Essentially, Tesla is forcing everyone to cut costs whether they like it or not. Now, a silver lining might be that long-term, this could be good for Ford, since they likely have had to innovate to cut price. And Jim Farley says that they totally had to redesign the vehicle. And so Tesla's actions may help Ford become leaner and more competitive in the future versus other industry peers. However, Ford's electric vehicle strategy seems to be a bit all over the place, almost as if they're trying to copy Tesla, but a few years behind. And they're still stumbling in areas where Elon Musk and Tesla have effectively publicly told them what to do, and yet Ford is making mistakes by not even copying Tesla properly. For instance, Ford's CEO seems to have recently had this revelation, based on his recent interviews, that the quality of batteries is important. For one thing, it's not just about mining materials. They thought that nickel and lithium mining would be the constraint on the business, and Farley admitted that he and Ford were wrong about this, and that instead the processing of these materials is key. But Elon Musk has been saying this for years, since at least 2020 at Tesla's Battery Day event, when Tesla publicly laid out its plans to extract lithium using its new milling method. That said, Ford seems to be pivoting quickly when they realize they've made a mistake, and they seem to be following the Tesla playbook, which is likely not a bad strategy. Jim Farley was throwing around the word megacastings in his recent interview, and also stated that Ford may get into making their own inverters, cutting out their suppliers, and something that Tesla has insourced for over a decade, since at least the 2012 Model S, and good inverters are not so easy to make. On Twitter Spaces today, Jim Farley also announced, alongside Elon Musk, that next-generation Ford vehicles would be using Tesla's NACS connector, which is a North American charging standard that Tesla developed. In the near term, early next year, Ford vehicles will have access to over 12,000 Tesla superchargers before Tesla's connector starts being available on Ford vehicles. This is big news for both companies, in that it will relieve some of the range anxiety for Ford buyers, but also Ford is making a bold statement by siding with Tesla's standard and technology, meaning that other players may have to follow suit to stay relevant. We already know that Tesla has been opening up its charging network to third-party vehicles, and this announcement strengthens that lead, as Tesla makes money each time a car charges at a supercharger, and it hurts other competing charging networks who could lose all of their Ford customers. Elon Musk says he doesn't want to build a walled garden, so he's opening up the charging infrastructure. But at the same time, he's building a massive wall of a network that will be extremely lucrative as its dominance grows. Now, Ford is also going as far to make their own batteries. Jim Farley says, "We're not going to import the batteries like Tesla has been doing." Now, this is misconstrued a little because while Tesla does indeed import LFP or iron-based batteries, like the ones Ford is planning on making, Tesla does build their own 4680 cells in Texas and in California, and they've been making 2170 cells with Panasonic for years in Nevada. Interestingly, Jim Farley readily admits that he doesn't think there's much value Ford can add in the battery space, especially since they're going to be using Chinese company CATL's technology to build their own batteries. Now, this is a bit of a mixed strategy since Ford's approach seems like a half-hearted one, which may be reflected in employee morale. Tesla set out to completely crush it in terms of production and bringing new ideas and technology to developing high-density batteries. But Ford seems to be setting the bar fairly low. At least they will learn about how CATL makes batteries, but while Ford will fully own its factory in the US, qualifying for EV battery tax credits, which is a great idea, they will still need to license and pay CATL for the technology. Now, CATL does make efficient LFP batteries, which will be important for Ford since Jim Farley again admitted the battery turned out to be so expensive that it's required us, meaning Ford, to completely re-engineer the vehicle in a way we probably should have done years ago. Now, a lot of these Tesla-type buzzwords and initiatives that Ford says we're working on may be because Jim Farley is trying to get shareholders on board with Ford's story to get the stock out of its depressed valuation. However, the company is setting aggressive targets, and if Ford misses the numbers, it may not bode well for gaining investor confidence. CNBC interviewer Phil LeBeau says that Ford is going from 600,000 EVs by the end of this year to 2 million by 2026, and there's lots of analyst skepticism around this. Indeed, there should be, because based on Ford's quarterly numbers, they sold roughly 10,000 EVs in the first quarter. They would literally have to pull a Mustang Mach-E out of a rabbit in order to hit this target by year end. Now, while Ford does have immense capabilities in producing the vehicle bodies, this sort of a ramp-up could be hindered by all sorts of supply chain issues, namely computer chips, which the industry continues to suffer from, as well as battery packs. Even Tesla's Giga Texas factory, which is already at a run rate of about 250,000 Model Ys per year, far ahead of Ford's entire EV division, likely won't be even close to producing 600,000 EVs this year, and Tesla has a much more robust EV supply chain than Ford. So these targets are extremely aggressive. It's already close to the middle of the calendar year, and so it's yet to be seen exactly where Ford will land by year end, not to mention their ramp up, which essentially calls for a 50x increase in production over the next 3 years. Now, Jim Farley counters in an interesting way by saying that Ford is moving into segments where there isn't a lot of competition, and he gives the F-150 Lightning pickup truck as an example. Again, these large vehicles require massive batteries, which don't exist yet today at this scale that Ford is talking about. In the first quarter, they sold just over 4,000 F-150 Lightning vehicles, which even when extrapolated yearly, doesn't make a dent in the roughly 750 to 900,000 pickup trucks that the company typically sells. While Ford has talked about the company making its own batteries, again, these would be LFP batteries, which are low energy density iron-based cells, meaning the battery packs would need to be much larger, making the vehicle heavier and inefficient or with less range, or Ford will need to purchase higher energy density batteries from other suppliers, thus losing some control over its supply chain on what needs to be a top-selling vehicle in order to maintain F-150 market share as the world transitions to EVs. While Jim Farley pokes fun at Tesla's battery strategy of purchasing LFP batteries from suppliers, that's not the case for the Cybertruck, where Tesla has specifically held back the vehicle to make sure they have the battery supply for the Cybertruck ramp-up. And Tesla VP Drew Baglino has confirmed this by stating on multiple Tesla conference calls that he intends to keep 4680 production ahead of Cybertruck in order to keep up. And given that Tesla will be making its own higher energy density nickel-based 4680 cells for the Cybertruck at Giga Texas, Tesla will be able to use fewer cells per truck, giving them more flexibility to power more Cybertrucks. Elon Musk has thrown the number 250,000 units around, which if Tesla could achieve this over the next few years, it would place them as the fourth largest pickup truck seller in the US, the largest pickup truck market in the world, and extremely lucrative. The Cybertruck will have a tougher time getting started with all of the new technology and processes needed to be set up to start building this vehicle en masse. But once it gets rolling, it should be much easier to build, given that Tesla doesn't need a paint shop, which has been a bottleneck at times for its other vehicles, and saves a step in the manufacturing process. Again, Jim Farley is stating that Ford is entering markets with not a lot of competition. He also says that there will be immense pricing pressure on EVs. These statements contradict each other. While there's no competition today in electric pickup trucks because no one can build them fast enough, Tesla's track record of ramping quickly is something that no one is ready for and could take the market by storm. Jim Farley seems to be looking at a snapshot of today's market without factoring in the changes that could occur when a new pickup truck player enters with new technology and pushes everyone to the side. He's expecting that it will take competitors a long time to ramp because it's taking Ford a long time to ramp up. Also, while 250,000 Cybertrucks per year makes Tesla the fourth largest player, this assumes that sales are completely incremental. But they need to come from somewhere. If Cybertruck eats into pickup truck market share, then the top three players will deflate rapidly. And if Cybertruck sales are indeed incremental, which is unlikely, but could be sort of a mix, the sales could come from potential SUV buyers, adding more pressure into that market. But right now we know that Ford has had to drastically lower prices on its electric SUV while it hasn't yet touched F-150 Lightning pricing since there's currently no competition, leading to the idea that Cybertruck could trigger a collapse of F-150 pricing if it floods the market. So it's interesting that Jim Farley says that Ford is playing in markets with not a lot of competition, but in fact it seems like the exact opposite. Even a single player in the space, Tesla, cutting price on Model Y affects the entire industry and half of Ford's EV business. And so Cybertruck will be no different, only that it's designed to target and beat out the F-150 in every way, and this is Ford's current profit center for the company. So do you think Ford Pro's dominant position in telematics, software, and commercial services will be able to differentiate itself to sidestep potential competition from Tesla over the next few years? And what are the potential risks and challenges Ford may face in meeting its aggressive EV targets, particularly in terms of supply chain issues and battery technology? Don't forget to watch my last video on how Tesla could take better advantage of Canadian tax credits. Please hit the like button and subscribe, we would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.